Hey everybody, welcome back. Sive here with the ForexPeaceArmy.com. Let's take a look at the euro currency again. As usual, we prepared report, weekly report, mostly dedicated to recent statistics, new risk factors that we see currently on the forex market, and some very surprising issues that might bring a lot of, a lot of hype around the coming Fed meeting by the end of the January. Particularly speaking, with the statistics that we have and the performance on the liquidity market in the United States, although market totally doesn't expect it, but I would say that the rate cut in January is not totally eliminated. So theoretically it might happen, and that really will be the big surprise to the market, an expected decision. So that's particularly speaking with the surprising event that might happen, and actually we explain why it is possible based on the recent dynamic of the SOFR rate and some other issues. Also take the general look on recent statistics, what does it mean, and what actually we expect in nearest times, as usual. So returning back to practical issues, which we're gonna do in coming week. Actually, it's no surprising. We are just intends to follow our trading plan. And 2 days ago, when we saw first signs of the weakness on the market, when it was not able to react properly on the support area, as the normal bullish market should to react. So when we saw inability of the market to do this, we have changed our view, and now considering bearish performance. And actually on Friday we've got another downside session. This performance partially is triggered, or maybe mostly is triggered, by very aggressive performance of the United States administration, not only in relation to Latin America, but also to European countries and Iran as well. So that's a bit scaring investors, and some demand for safe haven assets definitely exists. So you can see what has happened on the gold, as we promised. On Friday it will rise, so it has happened. You could see what is going on the dollar. It stands with the constant demand in the recent few sessions. And if you take a look carefully at the intraday charts on euro, you will see this constant, gradual, stubborn, consistent demand for the dollars. Market is moving lower very stubbornly, in a very tight range without any big pullbacks. It seems that constantly somebody is buying dollars, not very aggressively, slowly, but constant demand exists definitely. We do not know when this tendency will be over, but in the current moment it stands in place. So it means that we do not have any reasons to change our plan. And first, what we are watching for actually is a narrow around 116 target. So here we have the fib level 1611, and also some intraday targets. In particular speaking, it might be ABCD to the downside approximately 1595, 116 area. ABCD, here's what I'm talking about, guys. Let's take a look how market is moving here. Well, this is not natural market performance. It's definitely some constant pressure, some constant demand for the dollars, which is just make here on the pressure. It doesn't let them show any minor pullback here. It's just straightforward action. So 116. Here you will get some additional byproduct trading setups. First of all, the same as this one, with this pullback, it was good combination for the so-called bread and butter sell trade by the Judd Napoli terms, or you could call it just as a bearish momentum trade. It doesn't actually no difference with this. Overall idea stands as follows. So you have existing solid momentum, and first splash here, you are taking position with this momentum because it will work and it will push price lower just by impulse. That's the idea. Here we're going to get the second stage of the same trade. This was first one. Now when the market will reach 116 area, you could get another bread and butter with a small scale here. At the same time, if you take a look once again on the daily, you could see that this thrusting action is also suitable for the bread and butter trade, And that is particularly what we will be watching on a daily chart once the market will reach the 16 even area. Once the target will be completed, our next step in the trading plan is to watch for bounce, getting the bread and butter sell, and considering attempt to go short once again with the next and the major target on the daily chart, which is 1530. That's the COP extension of the big ABCD pattern, but this is also the trend line support of the big triangle pattern on the weekly chart. So that's in towards our plan. On the hourly chart, it mostly stands the same. So as we said, its overall performance might be finalized by the butterfly, which has the extension around 1606. So we have 1606, 1611, which market's almost is touching in here, and 1595, which is the ABCD right there. So 1595, 1606 in an area where we'll be watching for a bounce. Scalp traders, if you trade on the 15-minute chart, on the 5-minute chart, maybe you could find there some bullish context for taking scalp long trade with upward performance. Our particular interest will be twofold. For the most recent downward action, if you trade on the fall diaphragm chart and you would like to make the bread and butter trade here, you will be watching in an area around 1660. For major bread and butter trade that we have on the daily, that will be in an area somewhere around 1685, 117. So this confluence area that we have here. That's the levels we will be watching for as a potential target for a bounce. That's probably all that I would like to explain today. So actually, as you can see, trading plan is not very sophisticated, rather simple. First stage is waiting for the reaching of the target around 116. Next stage is a bounce to the two levels, 1660 and 1685, for the same trades but on the different time frame scales. And the third stage, watching for bearish signs around confluence area and the points where the bread and butter will start, with the target around 1530. That's approximately the idea. So let's see how it will turn.